It's time now to cross back to the World Economic Forum, and of course currently underway in Davos. Senior anchor Alishia Seckam standing by, and Alishia, you've got Philip Jennings with you this time around. And last time he came on CNBC Africa, I remember a lot to say about that Walmart acquisition of Massmart, and happy about that, and happy about the impact on jobs. So I wonder what's on his mind today as he stands in Davos.
Well, certainly Philip Jennings getting vocal here in Davos at the World Economic Forum 2013. Like you say, Sam, he's joining me now live to get his perspective on the kind of conversations that are happening on this end. Philip, thanks so much for joining us. Your message for Davos: give the world a pay rise. That's what you're planning to tell the leaders gathering on this end, a push for a living wage. It's a lot easier said than done, though. So let's get into it and let's get through some of the rationale.
Okay. Last week, the World Economic Forum published its Global Risk Report. 1,000 experts from around the world, political, economic, business, academic, came up with their assessment of what was the most prevalent risk that the economy faced. And it was the growing income disparity, the growing inequality gap, and the fact that we had this wealth gap. So I was thinking about what has happened in recent times with respect to the distribution of wealth, and worldwide, as in South Africa, we have a deteriorating situation. So as a union leader, my idea of trying to make sure that all the boats could rise at the same time was to say the workers of the world need a rise.
As you've highlighted, we've seen some of that example play itself out in South Africa, with the labour unrest plaguing both the mining sector and the agricultural sectors at home. But then we see the effect of that unrest and bending to wage demands as businesses are forced to review their business structures, like we've seen with Anglo Platinum, resulting in the closing of mines and the cutting of jobs in order to remain profitable. So it's really a fine line to make sure you don't inadvertently widen that gap further.
Look at the global situation is as follows. The share of wages in the wealth produced has been in decline. And we've reached a situation where the situation has never been as poor as it is. So that's ringing alarm bells here. The business leaders here are saying this level of inequality, this income disparity is not sustainable. So they have to ask themselves the question, what is determining their behavior in their assessment of the potential for their business? And I feel that their expectations are too high. And I feel that they're expecting to get a rate of return which is not sustainable in a global economy which is growing at 1% in the developed world, growing maybe up to 2 or 3% in the developing and in the emerging markets, and still there's this expectation that you have a rate of return in double figures. This doesn't work. So what are some of the result is you cut your investment to get that rate of return. You cut your investment and then you take a hammer to your labour force and put more stress and pressure on them. It doesn't work. They should lower their expectations in a time of economic crisis and share the burden. I don't know the details of the Platinum's case. There is a world recession. The demand for raw materials, which has been buoyant for the last years, is simply not there. I'm not sure this is about the wages of the workers involved.
In theory, it's about putting money in the pockets to give the spending power to employees to actually jumpstart the economy. I mean, we've heard that the link between wages and productivity has ruptured. What's your response to that?
It's the proof is just that. I would call it the Davos gap. If you look at the way that wages have improved and developed in the last 2 decades and how productivity has improved, there's a disconnect between the two. In the largest economy in the world, which is America, the wages of the average working man and woman have not really improved for more than 30 years. There's been a wage standstill. As a result, you have a problem of demand in the economy. As a result of this inequality, it creates new stresses and strains. The financial crisis we saw was partly the responsibility of the levels of inequality of people borrowing to maintain a standard of living which they couldn't sustain. So therefore, that's why we're saying the world needs a raise. That we need to put some purchasing power back in the pockets of workers. And they need that in South Africa, and they need it in the United States of America.
Philip Jennings, always a pleasure chatting to you. Thanks so much for having joined us here at the World Economic Forum in Davos. Sam, that's just some of the conversation that's happening on this end. It's back to you.